In this video, we're going to be talking about the challenges between rental arbitrage versus co-hosting, so stay tuned. Vacation Rental Machine helps hosts just like you learn how to start, grow, and scale your short-term rental business. This show is all about creating systems that help you automate your business, giving you more time and money freedom. If you're ready to start living the vacation rental life, then subscribe to this podcast today. Come and join us on our Facebook group, The Host Nation, where we'll be talking about starting, automating, and scaling a short-term rental business. Now, on to the show. Hey, welcome back, Host Nation, to another episode of Vacation Rental Machine. I am Julian Sage with John Bell. Now, for those of you that may not know, John and I have a management company called Cohost It, where we actually manage other people's properties through the model of co-hosting or property management for short-term rentals. But John is also a very experienced rental arbitrage or master lease investor, being able to have scaled from 0 to 24 properties in 18 months, all while having a full-time job. But now John's portfolio, I would say, what is it? Probably about 50-50 co-hosting and rental arbitrage now?
Almost there. I'm looking for that 50-50 balance. And we'll definitely talk about those reasons why that's important. But yes.
So one of the really unique things about this show is that not only do we teach and talk about rental arbitrage or master lease investing, but also co-hosting, because there is a really nice blend that most people don't really understand. But we're going to be talking about some of the differences between rental arbitrage and co-hosting and which way is going to be a little bit more challenging to start and scale. So John, with having about 50 properties, what has been your experience with scaling these master lease properties versus your co-hosting business?
It's definitely harder to start a rental arbitrage business because you got to go out, you got to convince landlords to let you into their space. You'll be signing a lease. So there's an agreement and stuff that's back and forth, and you have to deal with some of the other tenants and things that might object to even just having other short-term rentals in the building. So it's definitely harder to just start a rental arbitrage business versus co-hosting. So talking about co-hosting, the challenge is a little bit different. It's not as hard to get a listing under your profile. You could be able to message some of the current people that are out there and just say, hey, I offer this service and I could help you raise your ratings, or I can help manage some of the day-to-day things that you might not want to do. A lot easier because you're dealing with people that are already in the space. They kind of know what you need to do, and you just need to assure them that you can do those things. So completely different. Now, the next thing or the next phase that could be challenging for co-hosting is actually dealing with those exact same clients that allowed you to co-host their space. Now you have to give them reports. Now you have to perform on what you said that you can do. Now you actually have to talk to them repeatedly. Sometimes they want you to call them at the end of every month. They have questions. They want you to do blank. It's almost like hand holding. With the landlord, it's not like that. Landlords, as soon as you sign the lease, typically they're gone until you say, hey, something's broke, and or there's an issue, which either way, if there's an issue, you'll be contacting either the landlord or the client itself, letting them know. But landlords are pretty much out of sight, out of mind until it's renewal time or until they have another property for you to take over because you've done a good job. When that happens, that's when the good side of rental arbitrage really starts to roll in, because this person is telling you, John, I got 4 apartments that are coming available in this building. I want to give you first right to say yay or nay. What do you say? Yay or nay? I'll take half. I'll take them all. Very easy at that point. So very hard to get in good with this person, but now very easy to continue this relationship. With your co-host client, you're really based on their referrals or them going out and getting new properties and handing them to you. So it's a little harder because they don't necessarily move at the pace that you want them to move. So where you started off quick, your fizzle is a little slower.
So John, one of the big questions that I hear all the time is, well, if you're able to make all of this profit, managing these rental arbitrage master lease properties, why would you even start managing somebody else's property for just a percentage? You're only making, 20%, 15%, however much percentage you're making, you're not making all of the pie and you're having to deal with the client. So why not just do everything yourself?
It's hard to just do one model. No matter which one you start with, it does bleed into the other method. You're either going to start rental arbitrage, you're going to grow yourself to a certain point. People are going to reach out to you and say, "Hey, I see that you got all these listings. I want to list my place, but I don't want to do it myself. Can you help me?" You might have a guest that says, "Hey, I stayed at your place. I had a great experience. I got a vacation rental out in Florida. I want you to come and list my place." Great. I can do that. It kind of opens up that door. When you're doing the co-hosting thing, you'll then raise enough money to say, "Hey, I can go out and do rental arbitrage. I no longer have to just take 15% of somebody else's bookings. I can complete the whole pie with just all of my stuff. So I'll go out and I'll go do this." And you got a track record to show, "Hey, I do a good job at this, Mr. Landlord. Look, here's my reviews. If you want to see them, you see how people rate me. You want to talk to somebody that I could actually deal with, talk to this owner." It always bleeds into the next method. So you're going to want a good blend, right? I would love to be able to pay for all of my leases through co-hosting. And that way, I don't have to worry about not making enough money during certain seasons, for COVID coming through, for anything. I literally can just take what I need to take from the business, whether that means all the revenue from my rental arbitrage properties, and put it in my pocket, because my co hosting is actually going to drive the cost of all of that. It's just going to pay for it itself. So it bleeds into the other. It's a good mix when you want to mix them together.
Right. I think this is one of the most important models that we are always talking about. If you haven't attended our training on, how to be able to scale to a six-figure business in 56 days using short-term rentals, in that training, we actually talk about this concept called the RCB model of investing, rental arbitrage, co-hosting, and buy and hold. The reason being, and what we're really hitting on right now, is just the idea of diversification, diversifying your portfolio. In the last great recession in 2008, a lot of the companies, a lot of hotel companies like Marriott, Hilton, all these companies, they owned a lot of property. They had a lot of buildings. So what they ended up doing was switching to an asset from an asset heavy model, being you own the property or you're master leasing the property, to an asset light model where you're managing the property. So Marriott, Hilton, all these companies, they ended up selling off a lot of their buildings and switching to just an asset light management model or a co-host model. So now they have to deal, with these clients, with these investors that have these buildings. They have to work with them. There's new processes. They have to communicate with them, give reports. There's a lot more work involved when you're dealing with another person, because now you're running the business, but you're also reporting it. But they were able to survive and able to actually grow their business because now they had a certain portion of their portfolio being asset heavy where they owned it, to another portion being asset light where they're just managing. So there's no upfront cost, no upfront capital, just more sweat equity, more time that they have to invest to be able to get a lower return, but it's pure profit. So the last model that we're going to be talking about is buy and hold investing. So John, what is the struggles with buy and hold investing for starting and scaling? And why do you suggest starting with rental arbitrage or co-hosting as opposed to buy and hold if you're trying to scale a short-term rental business?
It comes down to just initial cost, right? When we're going to go buy and hold, we're talking about 10, 15 to 20% down. And not everybody has that in their potential markets, right? I mean, if we're talking about DC, we're talking probably at an average home price of about $500,000, and coming up with $50,000 might be hard just to buy one property. When we can really invest some of that money or all of that money into a cash engine like rental arbitrage, like actually doing some co-hosting to get to that rental arbitrage method, we start to add more fuel to our pocket to then be able to ramp up and buy with some scale at the cost of which we're bringing in extra revenue. So let's just run some easy numbers. If rental arbitrage is profiting you $30,000 a month, and your down payment is, let's just say, $30,000 a month, that means you can go put down $30,000 a month on a brand new property each month. Well, that probably won't work out like that with debt to income, but you see where we're going. You could actually build the money that you need to do the buy and hold method through rental arbitrage, through co-hosting, and then it helps you be able to go out and get another one quicker. If you were to just go jump out and just buy a place, you got to kind of build your reserves back up. You got to take care of the place that you already have going. You got to wait, you got to wait, you got to wait some more. And then you can go out and then put down another $20,000 or 20% or whatever it cost you to actually buy a place. And then you got to do it all over again. It's just slower. It's really, really slow. Now, of course, there's so many people that want to say, hey, what about the asset that you actually hold and the appreciation that you get there? Yes, there's something there, but it still doesn't equate to taking that $50,000 that you're going to put down on the property and starting 5 rental arbitrage units. And let's just say you only bring in, I don't know, $4,000 a month in profit. That $4,000 a month is more than what you would actually probably get on the place that you're buying without putting down so much. So tomato, tomato, but you're going to want to do it after you've incorporated the other 2 methods.
Right. So what we're really talking about here is cash flow. You use rental arbitrage, you use co-hosting to be able to increase your cash flow. Then once you have the cash flow, you can put that cash into a vehicle like buy and hold investing, because then you will see that equity, you'll see that appreciation. You can look at purchasing property as almost like your little cash reserve, your piggy bank, but you're not going to just, go straight into purchasing something that does require a lot more capital, because the scalability factor, if you're really trying to scale, the beauty of being a short-term rental operator, a manager, is that you do have the ability to be able to invest in these rental arbitrage master lease units. You do have the ability to manage other people's properties. If you are just more of a passive long-term investor, if you're just depending on purchasing properties, your scalability is going to be very limited.
Yeah, what we're talking about here is definitely more about tools in your toolbox. You want to make sure that you have just plenty of tools to get you to an end goal. And maybe your end goal is not to even buy and hold an asset. Maybe you want to buy a business. You can generate the cash with this model and still go out and buy the business. So you just want to make sure that you're using all the tools that you have access to wisely.
Right. So if you want to learn about this unique strategy of how to be able to grow your short-term rental business using rental arbitrage investing, co-hosting, and buy and hold, then definitely you should check out our coaching program, the Vacation Rental Machine Formula, where we actually show you how to be able to scale your own business using these 3 different models, the RCB model of investing. Now, I'd recommend, if you haven't attended our free training, our free webinar on this model, and where we go in depth and we actually break down the numbers at the end of this presentation of this webinar, we also do offer our coaching program. If you're interested in learning more about this unique model of RCB investing, how to be able to actually scale a business using the 3 different models, then go to shorttermsage.com/RCB, where you can attend our free training where we actually show you step by step on how to actually scale these 3 different models to be able to generate that cash flow, build up that cash reserve, and actually start being able to invest into properties through purchasing. Again, go to shorttermsage.com/RCB to attend that free training. So question of the day is this: which model are you using to build your short-term rental business? Leave it in the comment section down below. And until next time, Host Nation, keep on hosting. If you'd like John and I to answer your guys' questions, then be sure to go to the Host Nation Facebook group and use #AskVRM. Hope you hosts found value in this episode. If you did, please go on over to iTunes and leave us a review, as that would greatly support the show. If you'd like to connect with John, the community, and I, then go on over to our Facebook group, The Host Nation. Talk to you hosts in the next episode. Keep on hosting.